the whole AI supply chain, like there's a massive investment happening in data centers in the US, right? As we're all aware, and in fact globally. And any companies which are part of that supply chain are definitely seeing a demand increase in terms of orders, right? The other sector where we have actually seen benefit of this whole China plus one strategy, less on the MSME side, but players like Apple and Samsung have moved a significant amount of their production, cell phone production to India, right? So again, the direct exports are largely through larger companies, but then that does impact the broader supply chain, and which MSMEs have a role to play, right? So I would say that there are some sectors which are just given the industry dynamic are seeing some tailwinds. But all in all, I think just given the macroeconomic uncertainty and what we've seen with tariffs and war, in general, I think it's been not such a great time for exporters in the last 12 months.
Welcome back to MSME Talk podcast for micro, small, medium enterprise businesses and startups.
This is 2026 MSME Day special episode on MSME Talk with industry leaders and entrepreneurs to share key sectoral insights, updates, trends relevant for MSMEs, startups and entrepreneurs, covering topics like MSME export trends, solar adoption among SMEs, specialty chemical MSMEs, and retail and distribution MSME segment. Timestamp for each of these topics you will get it in description. Before we move on to the episode conversations, let me share about MSME Day. June 27 was designated as MSME Day by the United Nations General Assembly in 2017 to recognize the vital role of micro, small and medium enterprises in driving the economic growth, innovation and employment. The first MSME Day was observed on June 27, 2017. So this year it is a decade since the day 27 June was designated as MSME Day. Now let's get back to the episodes which we have curated for MSME Day. For better experience, I would suggest you to switch to 1.25x speed, and also don't miss to subscribe at the rate MSME Talk on YouTube, Apple and Spotify. Drip Capital is a global finance company providing trade finance to MSME exporters and importers along with B2B commerce solutions. Today with us, we have CEO and co-founder Pushkar Mukewar on MSME Talk, MSME Day special episode. A very warm welcome on MSME Talk, Pushkar.
Thanks, Tripti. Glad to be here.
So, Pushkar, the whole idea to understand today is basically that Drip Capital is doing a very large scale of financing business for exporter importers. And this is a situation where actual transactions are converting and happening, which is not about at the discussion level just. So your data points are very valuable for our listener and for us, and hence we would like to know a little bit more about what's happening in the industry and in the economy. So Pushkar, our first question to you is, over the last 12 to 18 months, based on Drip Capital's financing data and observation, which MSME sectors have shown the strongest momentum in export financing demand, and which sectors appear to be facing the pressures? So basically we are asking about the headwinds and tailwind situations in the sectors of MSMEs related to export.
Sure. No, thanks, Tripti. Happy to share some insights based on what we observe at Drip Capital. As you highlighted, we are a digital trade finance platform. Focus has been on providing export finance to the MSME sector. So we do get some insights into what's actually happening on the ground. So I think, as we kind of all obviously know, in the last 18 months, there's been a lot of macroeconomic factors which have been impacting exporters in general, right? I think starting with the tariffs introduced by the US, geography, and frankly, I think US has been, or historically has been, an important trading partner for Indian MSMEs. Almost, I would say that for us, like almost 30-35% of our trade volumes, which we end up financing, is to US geography, right? So the introduction of tariffs, and then the kind of, with some tariff rate initially back in April of last year, then the increase in tariff, in August of last year, has certainly impacted, any segments which were heavily focused on the US market. So when we look at sectors which were heavily focused on the US market, sectors like apparel and textiles, where a lot of our small business exporters are working with brands in the US, those sectors, that sector has been definitely impacted, right? When you look at seafood as a sector, which is again one of the major exports which India does to the US, that's another sector where we've seen that, tailwinds from because of the tariffs introduced by the US. um, Gems and jewelry, I understand, is another sector, but we don't end up working with too many gems and jewelry exporters, but that's another sector, right? So any sector where there is a high dependency on the US market is a sector which has, of course, kind of faced headwinds because of the tariffs, right? I would say that another macroeconomic impact which happened was, of course, the war in Iran, which started about a month and a half ago, right? So what we obviously have seen more recently is, the GCC exports have gotten impacted, and a lot of agro commodity exporters, whether it's sort of rice, spices, chili, etc. So those are like dominant exports which happen to the Middle East broadly, and we are certainly seeing exporters slow down because there's no certainty on kind of shipment times, and the concern is that even if the kind of ship docks, like will the goods get discharged, and then again whether the buyers are operating their businesses and whether payments will come in on time, right?
Mm-hmm.
So if we think about it in general, I think it's been, unfortunately, the majority of sectors have faced headwinds, right? A lot of it macro driven. Of course, the tariff in the US has been now revised after the Supreme Court judgment. We are starting to see, when we talk to exporters, that they are starting to see order volumes coming back, but we haven't yet seen that translate into real volumes. But at least exporters are certainly starting to receive orders, right? Now, partly it is that freight rates have also gone up because of the war, and people are again skeptical about sort of, shipping out cargo right now. But hopefully things stabilize, right? Now, on the other hand, I think as you are also asking, what is perhaps where do we see growth, right? Or where do we see positive movement? See, I think the AI, the whole AI supply chain, like there's a massive investment happening in data centers in the US, right? As we are all aware, and in fact globally, and any companies which are part of that supply chain are definitely seeing a demand increase in terms of orders, right? The other sector where we have actually seen benefit of this whole China plus one strategy, less again less on the MSME side, but players like Apple and Samsung have moved a significant amount of their production, cell phone production, to India, right? So again, the direct exports are largely through larger companies, but then that does impact the broader supply chain, and which MSMEs have a role to play, right? So I would say that there are some sectors which are just given the industry dynamic are seeing some tailwinds. But all in all, I think just given the macroeconomic uncertainty and what we've seen with tariffs and war, in general, I think it's been not such a great time for exporters in the last 12 months. Now we're also hoping that things improve. Yeah.
Yeah, and especially we also want to understand, because this is a timing when currency is depreciating a lot, and in whenever currency is depreciating, it is always being taken for granted that exporters will be getting the benefits.
Yes.
Now
Yes.
is a situation where we want to know, really, are there any pockets, any situations which is being created for exporters, which they are able to take the benefit, or is just like
Yeah.
you are already having other situations, you're not able to take the benefits.
So, see, I think, I see that a lot of times the impact of this currency depreciation, you typically see that more in the medium term, right? Because suddenly now your goods become cheaper globally, right? And hence you are able to compete for new orders and perhaps win business which you would have not otherwise won, right? But again, B2B trade also, there are cycles, right? In terms of the sales cycles are not very short. So while yes, the depreciation of the currency has happened in the last, I would say, 2.5 months since the war, and the concern around oil prices going up. My sense is that we are hopeful that that will translate to actual increase in order volume for a lot of these MSMEs, perhaps in the next, this quarter and the following quarter, right? So if you ask me, have we already seen some impact of that? I wouldn't say that we have. Of course, when we talk to our exporters, the fact that they have invoiced for goods which were shipped in the last 3-4 months in dollars, assuming a certain cost structure or a certain rupee calculation, they're obviously benefiting from it now. With the spot rates being higher, but has that translated to direct increase in order volume? I would say that we haven't seen yet, but we are hopeful that we should see that in the next 3 to 6 months. Yeah.
Got it. Interesting. And we hope so. Things can smoothen up. Very soon, these geopolitical things can come into a balanced way so that businesses can get back to the normal scenario. Uh, so, Pushkar, going to the next data points which you want to understand is what data indicates, from the drip capitals working that international markets which are generating the highest interest among the Indian MSMEs.
Yeah.
And have you observed any notable shifts in export destinations over the last 12 to 18 months?
Yeah, yeah. So I would say that one movement which is happening is obviously like the Indian government so focused on signing FTAs with multiple geographies. We have a UK FTA, we have a EU FTA, which is going to be fairly large in terms of opening up the market for exporters, right? So I think amongst our export clients, we certainly see a strong interest amongst them to build business in these geographies, right? Since these markets are opening up. Of course, it does come with some concerns, right? I think the EU market is extremely stringent when it comes to compliance, when it comes to quality norms, right? And in the MSME sector particularly, right? I think trying to meet the bar around quality and compliance is has been historically a challenge. In some segments, of course, you have more specialized MSMEs who've already been supplying to the European market. But despite these markets opening up, folks who have had no presence in the EU market while they're exploring opportunities, I think they're also concerned about the kinds of norms they would need to comply by, and whether the quality of product and the way they kind of manufacture or source stuff is that in compliance with what the EU requires, right? So I think so that's kind of how I would put it. So not any notable shift per se in terms of suddenly like a lot of increased demand from any market or from any geography, but certainly anecdotally a lot more conversations happening and a lot more exploration happening in terms of how do you diversify beyond the US, because now with US tariffs being somewhat volatile and uncertain, people are looking actively at other geographies. Yeah.
So that's a good point actually we have made, Pushkar, which is very, very right that when it comes to the quality part and meeting the norms of the other countries, especially European Union's kind of levels, Indian MSMEs really need to come up the curve. And
Yeah.
yeah, and a lot of hand holding, acceptance to do this need to be done. And government support is also very good, which is happening currently. A lot of push by doing a lot of FTAs and bringing in a lot of other countries into the fold and the dialogues. So what you said is right that maybe right now it's a short term may not be we are able to see it, but if this
Yes.
momentum continues in longer term, a lot of other geographies we can see getting increased share instead of just US, as you
And I think
mentioned.
with a lot of these FTAs, I think the primary beneficiaries are large corporations who already have a presence, have a have a business in those geographies, and they are kind of able to expand on that.
Okay.
MSMEs, it takes takes longer for MSMEs to
Right.
really capitalize on the opportunities which perhaps get created. Yeah.
Right. It's also, indirect benefit with the way which you discussed in the previous question, that while larger corporates would be taking the benefit, but
Yeah.
ultimately in the back end somewhere, these
Yeah.
MSMEs
The
would be
supply
in
chain
the supply chain. So they would be
benefit
getting it, that kind of benefit from them.
makes sense.
Good.
Makes sense.
So Pushkar, let's understand the next part from you, which is over the last few years, what are the one or two more significant, changes drip capital has observed in the financing requirement or any behavior of MSME exporters? It's fine if you have not seen, but if it's really, we would like to hear.
Yeah, yeah, yeah. So I would say that, see, for us, the focus has been on the MSME sector because we fundamentally believe that there's a large trade finance gap which exists in that segment, and they are a segment which has traditionally not been, it's been underserved, by traditional lending institutions or banks, right? Again, largely comes down to whether they have the collateral to be able to, secure enough bank financing and so on and so forth, right? Um, I think obviously, like one change we've been observing is that there has been a very very strong push by the government and by the RBI in terms of by the Commerce Ministry in terms of enabling credit and unsecured credit to the MSME sector, right? Whether it's been like the 59-minute loan, or more recently there has been an announcement where, with the macroeconomic factors which are impacting exports, the government is also uh, in fact rolling out a scheme where every MSME would get up to 15 to 20% of their credit line in an unsecured manner. So there will be an enhancement to the credit line, and it will be unsecured, perhaps even guaranteed in some way, form, the government side.
MGTS scheme has been announced, which is giving the guarantee to the exporters. Yeah.
Exactly, guarantee to the banks or institutions. Yeah. So I think has been a very kind of, we've seen that generally been happening through various schemes and various initiatives by the government as to how do you enable credit for this segment at a more institutional, at a more systemic level, which will then help these MSMEs really fully realize their potential, capitalize on the opportunities which exists, right? So that has certainly been a change. It's a positive thing for the industry, and we would love to see more and more support extended to MSMEs. And yeah, and I think we
So
would.
has this impacted, so such whenever such scheme comes in, Pushkar, do you see there's any change in behavior of MSME exporters? Like, do they prefer going towards banking institutions more, and rather than coming to platforms like yours, or
So
some
yeah,
low behavior?
in certain segments, it does
Hmm.
happen where maybe we have MSMEs which are perhaps very small. When they start working with us, we enable them to kind of continue to increase their volumes, grow in size, right? And they become more mature where they are eligible for larger lines from banks. But that's part and parcel of, what we are doing for the MSMEs. So or when the such schemes come up, of course there's more credit availability, but typically these schemes also come up when there's more credit demand. So right now, when while the scheme has come out, but the scheme has also come out because the government is realizing that many MSMEs have working capital challenges because their orders are perhaps getting stuck, or volumes are getting impacted, right? So usually there's also, when the credit supply increases, oftentimes it's in reaction to an increase in credit demand. So from that standpoint, we while we observe that, and we see that, but it doesn't necessarily impact their working relationship with us. The MSMEs continue to leverage us and use us for some of their needs. Yeah.
Okay, okay. So you're saying whether in this such situation, these schemes are even if coming up, the requirements of the clients which are usually come to you, or the your target segment which usually comes to you, there's not much of change in their behavior or their requirement. They're fine with that kind of working which is happening. Okay.
Yes.
So, Pushkar, has DRIP observed any new export clusters or regions emerging very strongly from India? Uh, or is there any geography which has surprised? It could be
Yeah.
negative or positive surprise from India.
Yeah. I wouldn't say geography necessarily, but again, couple of supply chains where we are seeing a benefit is one is, as I mentioned, electronics, right? A lot of mobile phone manufacturing has moved to India. Of course, Apple is a more talked about story, but I was just reading a report where even Samsung, right, has moved a significant portion of their production into India, right? Like, and at some level, that is effectively impacting the MSMEs as well. While the Foxcons of the world are the direct beneficiaries, but then the effect of that does percolate down to smaller companies, right? I think the other exciting area is the data center ancillaries, right? Like if MSMEs are able to play some role in that segment, there's massive demand,
Have
right?
you seen anything coming up from the data center
We
side?
do work with, but again, it's very limited, right? It's not become a large enough segment or industry yet. But of course, we are seeing inquiries and we are onboarding some customers who are part of these supply chains. But I would say that very likely that in the next 2 to 3 years, 5 years, we might see this sector actually expanding, and this becoming a play, right?
Okay, so you are seeing these clusters, which is overall on the larger scale, larger companies which are developing, whether it is a data center or the mobile manufacturing or these,
Yes.
commerce related, they are going to impact in the MSME space as the new clusters and places. Okay,
Yes. Yes.
interesting. So Pushkar, in the start of the our conversation, you mentioned that 30% of your clientele which are coming are exporting to US. Okay, could you share some more inputs related to which other countries or regions?
Sure. So I wouldn't say 30% of our clients export to US. I would say that about 30% of the volume we fund or we
Huh,
finance is to the US market,
fine.
right?
Yeah,
Across
that's
clients.
what. Yeah.
Obviously, based on sectors, it may be like, for example, shrimp or textile, the percentage of US exports is higher. And in certain sectors like agro commodity, rice, the logistics costs just doesn't make sense. So those sectors, you don't see as much US volumes, right? In terms of overall, when we look at like the three or main geographies, which three four main geographies which our customers or MSME exports are typically focused on, one is obviously the US continues to be an important market. Second is GCC. GCC is actually also a very large market. A lot of times the trade also happens to Africa, but goes through GCC, right? Whether it's the broader Middle East or Africa. So and again, there you see a lot of exports of commodity products, mostly agro commodities, right? Because again, the eating habits tend to be similar. So there is exports of those kinds of products to these markets, right? Europe is more specialized goods, and we do fund exports going to Europe. And I guess in pockets there's some exports happening to China, but it's obviously not major, right? And then so that's kind of how we look at it, right? Of course, for us also as a platform, any exports which may be happening to CIS or Russia and countries like that are, typically those customers are ineligible for us. So we will not have enough insights into those. But I would say that broadly, I think US, GCC, and then some specialized products to Europe, that's what constitutes like, perhaps 75-80% of the MSME exports happening from India.
Okay, got it. Great. So it was interesting to know your perspective, Pushkar. You're sitting in the space where export financing is happening through MSMEs. Thank you so much for sharing your insights, and we'll see you around again in some other conversations.
Thank you, Tripti. It was a pleasure.
A very warm welcome to MSME Talk special episode on MSME Day. Today we have India Business Head of Candi Solar. Candi Solar provides complete solar solutions to businesses right from financing to execution and maintenance. Candi Solar's India business is headed by Nishant Sood. A very warm welcome to MSME Talk, Nishant.
Thanks, Tripti. Pleasure to be here.
So, Nishant is going to share some interesting insights on solar solutions in India. industry, how it is moving, what's happening at the ground level. Okay. So, Nishant, first of all, we like to understand over the last 12 to 18 months, which SME sectors have shown the strongest demand for commercial and industrial solar adoption, and which sectors appear relatively slower in the adoption.
Sure, sure, Tripti. I think I would sort of put the ones that have adopted solar in the last 12 to 18 months in broadly in two categories. The first category are the highly energy intensive ones, and the ones that sort of have a very constant sort of daytime load profile consumption. So these are your standard energy guzzlers, and when you see why the last 12 to 18 months the pivot has been slightly faster for these companies in these sectors is because of the geopolitical situation. We've seen how alternative and the other energy, the traditional energy forms are starting to become more expensive because of the geopolitical factors in the last few months, whereas solar has been quite constant in terms of its pricing, and as is common knowledge now that solar is cheaper than what the grid tends to offer. So these would tend to be your auto component manufacturers, your steel manufacturers, export-oriented units as well. Um, this would also have engineering units, food processing units, cold storage units, foundries. All of these are high energy intensive systems. The other place which is also extremely energy intensive, and it's coming up significantly, though that story is probably even shorter than the last 12 to 18 months, would probably be the data centers, because the way AI adoption has been increasing and the requirement for data centers is propping up. That is the next big thing where energy usage is relatively high. The second category I would say is, like I said, export-oriented units where there is ESG and HSE requirements because they supply internationally. Their customers have their own set of requirements in terms of what they need. Carbon credits, carbon emission is a big part of their ESG requirements and sustainability side of things. So solar becomes a very important means for them to achieve those standards in terms of carbon emissions and sustainability metrics. Um, where adoption has been slow is, I think the usual suspects, right? Where the daytime load profile is not as constant. Perhaps the rooftop shading, etc., is a bit of a problem. Roof access might be a problem. Um, so they have rented premises, or if they have limited roof space. So um so I would say that these kind of sectors also tend to have relatively lower consumption, just by the way that they are sort of structured. So those would be the ones that kind of do not have not been adopting solar at the same rate as the other ones.
Okay. So interesting what you are trying to bring the perspective that uh, high energy guzzlers have consciously now going into the adoption of the solar energy, and you're seeing a lot on these sides weather related, a lot of manufacturing unit at the large scales who are working and using high energy, and also the new industries which is coming in like data centers. And the slow adoption is more into the places where they have lack of space availability, rooftop accesses, and rented space, and other these kind of limited factors, and maybe not very high energy consumption. But I still feel maybe other time we can discuss. There are still many businesses where energy is still a high part of their manufacturing cost, but they're still very very laggard in their solar adoption or renewable energy adoption in India, even in SME space. Okay. So, Nishant, next thing which we'd like to understand from you, for SME and mid-sized businesses, say for an example, electricity bill exceeding 10 lakh and above, for an average this kind of category, what would be your estimate of the current solar adoption rate in India? And despite the potential savings, what are the key reasons many eligible businesses have still not adopted?
So I would put the solar adoption rate at less than 10% across India. It's significantly low if you're considering the entire space, right? If you're considering all of India. Um, and I think there are multiple factors, and I would almost split this into two parts. Because I feel like whereas in the very standard centers of business where there are a lot of industries, where there are a lot of companies, manufacturing plants, etc. The understanding of solar is there now, at least in the sense that they understand that it provides value, and they also understand that there are financing options available in the market, so they don't have to put in that much money specifically. In those cases, I think the problem is, uh, and I've said this before as well, the biggest problem there I feel is there is not a single point of contact who is responsible for sort of ensuring that solar adoption takes place. What ends up happening, especially on the SME side, is unless, let's say, the founder or the promoter is involved in those discussions, what tends to happen is it falls under someone, say, in the purchase team or the finance team. And solar by itself has a lot of different moving parts. If you were to think about it, the accountability doesn't necessarily sit in one place. So if it's a finance person, then they also have to get concurrence from someone from the plant, from the electrical department. Um, and if it's someone from the purchase department, then they have to get concurrence from the finance team. So what tends to happen is between all of that, because it's not something that is a key focus for, let's say, someone, it tends to get pushed out a little bit. And then also in terms of financing options, I feel um, teams tend to get confused a little bit in terms of how to sort of compare different options, how to compare capex versus opex, how to compare PPA versus a loan. So there are a lot of different things that make it slightly difficult. So if you sort of look at the broader picture and the fact that it's providing significant savings, then the decision should be fairly simple. But these complications, I think, do tend to extend the time for adoption, and also tend to reduce the adoption rate. And then the second part would be areas, which is huge also in India, given the geographical expanse of India, right? Um, Areas, let's say in the non-traditional uh, spaces where you don't have as much industry, where you don't have as much financing options available, wherein people have a limited understanding of solar in the sense that they sort of know that it exists, that it does have a bit of value, but they do not know that there are financing options available. They only think of it as a capex decision, which means it's a much more difficult decision because they have to take away money from their like core businesses and say that, okay, do we want to now start investing in solar? And that's a decision between a core business and a ancillary thing like solar, which they have to think about. Which is what we try to obviously take away in terms of understanding or in terms of risk from the client side of things.
Right. So, Nishant, very well put, that lot of confusion is there, clarity is not there, priority is not there, and which is actually delaying this whole cycle of solar adoption, apart from various other reasons. But this is at least for the businesses which are eligible and who are still, you should be taking it ahead on the decision making. While I was asking to get from you a perspective, a kind of adaptability scenario, you mentioned 10% kind of scenario, plus minus kind of a range in India. But we were trying to understand from the mid size and SME size, where say monthly bill is of 10 lakh. Okay, so where you can, it goes above a crore of monthly electricity bill from the business perspective, because this buckets this industry into a different segment itself. So in this space, what is the numbers coming in the adoption side?
I mean, it'll be tough to, I mean, this data obviously is not something that's available broadly in the market, right? So, on an India level, like I said, less than 10%, which is actually it's close to 3 to 5%. And I would estimate that for ones that have higher electricity bill, that number obviously goes up, but I wouldn't see it going beyond maybe 15, 20%. Data is obviously tough to find on a country level basis, but I wouldn't say that it's beyond that level. I mean, at the highest, I would say probably
Ah,
close to about 15, 20%.
okay, got it. So yeah, that gives some kind of idea of the range which we are working in. Okay. So Nishant, based on Candi Solar's interaction and your team interaction with SMEs over the years, how would you assess their understanding of commercial and industrial solar today? And are there still specific areas where these SMEs need greater awareness and or you can say understanding to go deeper before they can make informed decisions about solar adoptions in their businesses?
Absolutely. I would probably, I mean, the understanding has definitely increased since when we started off. People, like I said, in the previous thing as well, I would probably split the understanding a little bit in the non-standard, traditional spaces where there's not as much industry. Perhaps they are a little less aware of certain bits, but even in the strong centers of business also, I think there are areas where the understanding can increase. I would probably put that into three factors. The biggest one, I would say the first one would have to be the ability to understand the commercials, the economics of financed solar. Um, the commercials, which means risk versus return. So being able to balance both. The second one I would say is just the ability to understand some of the contractual elements, uh, which gets a bit more detailed. And then the third one, which I think is not as big of a thing, is understanding a bit of the technical side of how solar works and uh, not just solar, but how it interacts with the grid specifically, with the grid or with their alternative sources of energy like diesel gensets, etc. So the first one I would say is the risk versus return. I think the thing that uh, there is a lot of things on the market, right? First, you have CapEx, then you can start looking at OpEx, like I said, looking at power purchase agreement where a developer like us will sell you the power at a certain rate. Or we could extend a loan, and you're paying fixed EMIs for a certain time. The tenors could be different. CapEx is an upfront payment. The entire risk of performance is on the client. Versus if you have a 5-year loan versus if you have a 25-year PPA, how do you compare all of these? So I think the best way to look at these, and we've sort of been trying to generate that and awareness in the market, is to sort of look at the levelized cost of electricity, which means you look at how over the entire life of the solar, one unit will cost. And that gives you a good comparison. You can do that analysis for a 25-year PPA. You compare it with a capex as well. You can then compare it to the price that you're going to get from the grid. Um, and that sort of gives you an apples to apples comparison from a tariff perspective. Now there'll be a difference, of course, right? If you're doing capex, versus if we are providing financing, obviously we will need some margins, and if you're taking on performance risk, we also need some margin, and we need to sort of make profits in that sense, right? So then you can assess from a perspective of, okay, if I do capex, I'm getting a levelized cost of electricity of 4 rupees, versus if I go with these guys, I'm getting a levelized cost of, let's say, 4 rupees 10 paisa. Is the 10 paisa worth it for me to not take the headache of the performance risk? And especially when I start comparing it to the grid tariff, which is, let's say, around 7.5 rupees right now, and expected to go up by whatever 1.5-2% every year for the next 25 years. So the point is that at this level, then it's easier for someone to just mentally be able to say, okay, is this 10 paisa, is this 15 paisa worth the risk that I want to, and the headache that I want to take on, or pass it on to an entity that has experience doing it. So
Okay.
that's the first one. Then I'll get into the second one, which is more contractual, because there tend to be some very specific um, uh, concepts, I would say, that exist more in the solar and the electricity world. These are concepts like, and again, that this will tie into the third part, which is the technical understanding. There are certain concepts with regards to something called, let's say, deemed consumption or net metering, which sit in the confluence of where the solar system interacts with the grid. There are certain other concepts with respect to, let's say, force majeure or change in law and things like that, or future development risk, for example, that also need to be taken care of. And these are very, having been in the solar space, these are very standard discussions as a solar developer that need to be, and risks that need to be sort of mitigated. But those are certain areas which perhaps businesses are not as aware of in terms of contractual discussions when they come up. Um, and these are in, I would say, in lower order of priority. So if people can understand the first bit well, then point two and point three are easily sort of taken care of. And then, like I said, the third one is more around the technical side of things, which could be, for example, things around system sizing, things around shadow filled area in the rooftop, or in terms of what the requirement for the client is, right? So certain clients, for example, run for 24 hours and then they consume 100 units, but solar can only work for a certain time of the day. And if there is no net metering involved, then the system needs to be sized um, according to those number of hours. If there is net metering, which means that you can push power into the grid, then it's not a problem. Um, or the other alternative now is that you go solar and add storage to it so that you can sort of cater to their demand for 24 hours. So those sort of technical aspects is also something that people don't understand as much. Or for example, one thing, if someone has a diesel genset, how does the diesel genset and the grid infrastructure then collaborate with the solar to be able to provide seamless energy to the client? So all of those things are something I think that client can be more educated on, but that's an ongoing journey, I think. So we are also part of that educational journey.
Sure. So, Nishant, while you have shared that lot of, there's definitely awareness in the industry of an SME space about the solar adoption, but there's still deeper nuances which has to get into, like, more understanding and easier, understanding at the SME level, basically, founders level and at the team level, so that comparison becomes much more apple to apple or orange to orange rather than apple to orange. Okay. So, another thing interest which is happening in the industry is related to approved list of cell manufacturer. So, how this approved list of cell manufacturer will impact SME solar adoption in terms of their cost, availability, or for that matter, ROI?
So yeah, I mean that's a very pertinent question. Actually, this has been on the mind of every solar developer, solar manufacturer. If you're part of the renewable space, this has been the biggest talk of the town over the last six, maybe more than that, right? Last 6 to 12 months. Everybody's sort of been gearing up into that. And obviously, it's a much warranted action from the government of India. They want to encourage manufacturing in India so that we are not reliant, given our energy needs. I think it's great that we are not reliant on, uh, you know, uh, overseas manufacturing and overseas supplies of modules. Um, However, in the short term, obviously, there are some issues in terms of supply demand imbalance because we do not have enough, let's say, manufacturing capabilities to cater for the demand that we have. So, and we're already kind of seeing that there is a bit of volatility in terms of procurement and availability of those specific modules. And project cost may increase a little bit in the near term, but I think as the dust settles over the next month, maybe month or two, I think the dust settles and the pricing sort of finds its own feet. I think we'll be back to where we were. Even though I mean there might be slight differences with respect to cost, but the thing is like you adjust and you get to a new normal essentially, and still the project cost and viability will stay the same. Clients will be making savings with respect to their grid tariffs. Um, and
So
if
are you
if the
saying even with the increased cost because of the specific list of cell manufacturer being allowed, the cost will be increasing it, uh, but over a period of time, the impact will be divided and will not be very huge impact on the clients adopting solar. Is that what you are trying to say?
No, no, absolutely. So I think, right, like for example, if you think about it, like if with solar you're actually making anywhere from 40 to 60% savings with respect to grid tariff. Let's say the cost increases by 5%. You'll still be making 50% savings with respect to grid tariff. So the economics doesn't change. It's just that you just adjust yourself to a new normal and where the pricing and the fact is that over the last even 5, 6, 7 years, the pricing has been volatile for a bunch of different reasons, whether it's geopolitical reasons, whether it's supply dynamics from China, whether it's regulatory reasons in terms of the duties and tariffs that are charged on imported modules. So that is a constant thing. There is no such thing as a fixed flat price that you can think about for
So
modules.
cost is one thing, Nishant, but what about the availability? What is the status of availability?
Right. So, see, obviously, this has come in only from the 1st of June. So, we are sitting very, very close to when this has started. So right now there is still in the market a bit of a dearth of availability. That's a fact. But like I said, as we get into July, a month has passed on. You can still, I mean, modules are still available. It's not like it's completely gone. But I think as soon as you get into July, when the module manufacturers also sort of settle into what the current demand is, I think you'll find that the availability issues will also tend to go down. So cost will also, I think, maybe in the near term, like it has increased, it will also settle down a little bit very soon. But also availability will become better.
Why this thing came up? Why did the approved list of cell manufacturing specific thing was announced? What is the reason behind it?
So I think it's been a long-term planning from the Indian government to make sure that we become more, we make in, as part of the Make in India program, right? So they want to start manufacturing more and more within India. So the first step for that was a couple of years back, which was the approved list of module manufacturers, which means that the cells were imported. Even if the cells were imported, then Indian manufacturers could assemble and sell modules. Now, the second step for that is that the cell also need to be manufactured in India. And then I think the next step, which is also going to happen in the next 2, 3 years, is further going up into the supply chain and introduce wafer manufacturing in India. So all of these things, the entire supply chain then would have to be come into India, which means that you're not we're talking about gigawatts and gigawatts of installations here in India, right? So it's best that if it does get manufactured in India and we use it here itself. So I think that's part of what the government
That's a
is
whole.
trying to do.
Thank you so much, Nishant, sharing, grounded level things which is happening in solar solutions in India. And I'm sure our listeners would get some insights from it. And we'll see you around again in some other discussion uh, through Candy Solar. Thank you so much.
Thank you. My pleasure. It's always great to have a chat. And yeah, I'll be happy to come on for more discussions around this.
Thank you. A very warm welcome to MSME Talk podcast. Dear listeners, NICHEM Solution is an R&D based specialty chemical manufacturer supplying to 21 countries. Rajan Raje is CEO of NICHEM Solution. He is also on the board of various MSME chambers. So today he is going to share with us some trends, challenges and opportunities for MSMEs on the occasion of MSME Day special episode coverage. A very warm welcome Mr. Raje on MSME Talk.
Hi, thank you, Trupti. Thank you, Trupti, once again for inviting me to be a part of your podcast, where we are going to chat about the challenges, chat about the success stories, chat about the opportunities for specialty chemical manufacturers in India.
Thank you. So to begin with, Mr. Raje, I know last couple of years have been, very exciting or challenging, depending on the industry which we are into it. Okay. So in your industry, we would like to understand over the last 12 to 15 months, what have been the most significant developments, uh, especially related to specialty chemical sector, and how they have impacted SMEs like Nichem Solutions.
See, if we talk or think about the last 1 or 2 years, see, specialty chemicals are always a growing category. As the economy is growing, as the disposable income is growing, the demand for different products to be manufactured in India is certainly growing. But once you are in a specialty chemical, there are always challenges because the name specialty itself is a flag. And that flag is you have to be different, you have to be consistent in terms of quality, you have to be flowing with the time. In the sense, there are always demands from the market that you have to be ready with certain emollients, certain specialty additives, or certain other chemicals which become a part of the formulation. Because typically, once you are in a specialty chemical, the specialty chemical is only going to be a part of the formulation. The, the formulation could be in drugs, the formulation could be in cosmetics, the formulation could be in agriculture, the formulation could be in water, so on and so forth. So, the reason I said it is a flag is then you have to be always ready with something which the market needs or the formulation needs. So, last 2 years have been definitely demanding, but they are also providing a lot of opportunities. Now,
So demanding in what sense? Could you just, any specific?
demanding in the sense of quality, demanding in terms of time, demanding in terms of stability, demanding in terms of registrations, certifications, various aspects of being in a specialty chemical business. Because the moment you are offering something special, that means A, you have to justify the specialty, then you have to justify the performance, you have to justify the safety of your product, you have to justify the stability of the formulation after adding your products, and for sure ultimately the product has to be acceptable to the global market in terms of its safety, in terms of its approvals, in terms of its certification and registration. So these are the challenges.
So, because of the geopolitical situation, did any specific way of developments happened in the industry which you saw and experienced in the
Yeah,
business?
last 6 months, especially. I mean, the problem started with Ukraine and Russia war, but then over a period of time, the market stabilized, the supply chain stabilized. Earlier than that, the COVID created lot of disruptions, but then both these situations also opened lot of opportunities.
Okay.
The last war, Iran, US, and Israel war, unexpectedly created a lot of challenges. I mean, the supply chain got disrupted. Nobody expected that. Everybody thought that the markets are stabilizing, and nobody was honestly prepared for these kind of disruptions. So, this war definitely created the short supply of all polymers, short supply of all noble metals like silver or lithium, so on and so forth. And hence, there was always a need to do something different, to do something on a war footing. I'm sure, though I'm not in a pharma field, I'm sure there would be definitely a lot of challenges in supply of the raw materials in the pharma as well. But these challenges created lot of disruption. The prices went up. The raw materials were not available. But then, if you are into a specialty chemical field, you are having your own R&D or own innovation, then the challenges were not disrupting for a long time. I mean, we were disrupted for almost 3 months, but after the 3 months we found out the alternatives, we found out different formulations, different products. The only challenge remained creating the data of safety and creating the data of performance, which also we could do. So today we are comparatively better placed to handle these kind of challenges.
Got it. So now let's moving on to understanding little more your experiences in this last 1 to 2 years. Uh, what kind of specific shifts in the customer expectation, because you are supplying to very big large business houses and conglomerate and companies, so what kind of shifts in their expectations and overall market demands in respect of specialty chemical sector you have experienced?
See, as I said, the specialty chemicals, the first thing you have to really demonstrate is the performance. After that, you have to demonstrate the safety and the stability. And the larger companies who are our buyers are becoming more and more demanding. Because if they are into the global market, they are always pressed for the right price, right delivery, right quality. And that pressure automatically is transferred to all the suppliers. So we have to be always ready for the right product, right technology, right price, consistency, certification, everything. And day by day, they have to be ecologically safe. All the formulations, all the products, they have to be ecologically safe, they have to be sustainable, they have to be as far as possible of the natural origin. So these challenges always keep all the specialty manufacturers on toes.
So you, Mr. Raje, you have already built the background for our next question, which we wanted to ask you a little more in depth, is related to sustainability expectation in the market. So our customers and global market increasingly demanding sustainable products, and how is this impacting MSME? Is it So we would like to hear, more from you on this topic, because you have access to a lot of MSMEs working. You are part of very, very big chambers in India, and you know what's happening. Is it really that sustainability requirement is there? Is it a tick mark exercise, or is it really core to the heart of the businesses and people? They really want to go to that extent.
See, honestly speaking, sustainability is a need of an hour for sure. I mean, the definition of sustainability keeps differing, but ultimately, there is no question that we have limited resources, and those resources have to be used judiciously and with lot of respect. You take water, you take clean air, you take land, everything. And there is no doubt that everybody has to be aware about it, and everybody has to play their own role in safeguarding the environment and be sustainable all throughout your working. Now, when I said the definition of sustainability or definition of the need keeps changing, I'll give you one example. I mean, we keep hearing that plastic is bad. Everybody says it is a favorite subject of all the environmentalists. They want to ban plastic. Now, if we take about the plastic, I mean, today, why plastic develops so fast? Because A, it is easily produced in large quantities. B, it is lightweight compared to the glass, compared to metal and everything. Three, it can be modified to whatever properties you want, especially if you take cosmetics, if you take pharmaceuticals, you need oxygen barrier, you need moisture barrier, and plastic really meets all these requirements comparatively easily at a lowest cost. Surprisingly, the energy requirement to produce plastic, the land requirement to produce the plastic, the water required to produce the plastic, if you take per kg or per ton comparison between the alternatives like biodegradable plastic like PLA or glass or aluminium or any jute, paper, cotton, everything, and plastic will beat every alternate hollow. Absolutely hollow. I mean, their requirements are almost 1/100th in terms of water and energy and land and everything. The problem is not plastic, the problem is responsible use and disposal of plastic. That nobody talks. So, if you have to be sustainable in your behavior or in overall a crusader of protecting the environment, then everybody has to be first responsible.
So are you like your clients? Let's go back to your expectation of your clients, right? Uh, and the impact on MSMEs on this sustainability and ecological ESG and of everything coming, because sustainability is part of the ESG bigger picture. So we just want to know on the sustainability part, what it is happening. Are your global clients who are buying from you, are they seeking specific requirement related to sustainability actions or
Not
working?
yet, not yet. I mean,
Not
it
yet.
is not become mandatory, but it is
Okay.
coming. I mean, another 2 or 3 years, I know it is coming because see,
Is
there is
it?
a mandate for all the large industries to be sustainability compliant entirely. I mean, they have to also declare their sustainability quotient in their balance sheets when they go to their lenders or investors. They have to be declaring all those numbers, so automatically it will come to their suppliers. It is not yet there, but then it is better for the MSME to be ready from now on. And I tell everyone, including my own organization, let us begin small. I
Huh.
mean, electricity, why can't we save the electricity? It is not that difficult. I mean, you have your gadgets which are electricity efficient. You can ensure that whenever the electricity is not required, it is put off. Your production cycles are so properly managed and maintained that excess energy is not required. The
Right.
other things which the industry, the larger industry or the government is going to demand, it will take more efforts and more resources. But by then, you will be ready. So, to be ready, it is better to begin now, begin small ways, but then you definitely have to begin.
Okay. So you're saying yes, definitely at present not a mandatory situation from your global clients in respect of sustainability, uh, but it is coming not very far,
Oh,
and
yes,
MSMEs need to get ready on this.
absolutely.
Uh, Thank you for reminding this. In our MSME talk, we keep bringing conversation related to circular economy and something on and off, so that to make people aware, this is
Yeah,
not only a
Trupti,
tick mark exercise. Take it as your own responsibility towards the
correct,
environment
correct.
and ecology.
Yes, and unfortunately, every MSME stakeholder believes that being sustainable means you need money, you need resources, which they believe is a waste. But it is not. Actually, if you start walking on the path of sustainability and ecology, you will realize that the saving what you will achieve by doing that will offset your expenditure.
Wow. A very good, very good to hear from an SME manufacturer CEO these kind of words, which is very inspiring, I'm sure, for MSME listeners,
No, because
manufacturers.
see, I did that. I mean, being MSME, I know there is not a mandate, but we hired a ESG consultant who came, did our analysis of all our departments, suggested changes, and also educated our staff. So we have at least begun the journey.
Very
I know
nice.
it is a long way to go, but then if we keep walking on the path, I'm sure we will be there.
So this also leads me to ask you a next question from you. Looking ahead in next 1 to 2 years, what trends or opportunity shift you are expecting or anticipating, for which you will try to keep your business ready and competitive in the specialty chemicals?
See, I honestly believe that especially the chemical industry and the specialty chemical industry, India has a huge scope because see the Western countries, they don't want to pollute their environment, they don't want to do anything which has to do with chemical reactions, chemical manufacturing. So strategically they have anyway offloaded that industry to countries like China, then probably India. And when the world wants China plus one situation, it is bound to come to us because A, we are excellent organic chemists, and comparatively, the pollution control norms are not that strict in our country. They are not going to remain like that for a long time, but at least now we are not that strict, and as a result of that our manufacturing costs are going to be comparatively competitive, so we have huge opportunity. Now how to grab that opportunity is a challenge, because till now why the chemical industry did not grow in our country, because of various pacts we had with neighboring countries. The NAFTA. NAFTA was slightly distorted for the Indian manufacturers because the import duty on the finished product was less than the import duty on the raw materials. So, as a result of that, to manufacture after importing the raw material at a higher import duty was not competitive. So we kept on importing the finished material. But now we are signing lot of treaties which are eliminating the import duties or export duties either. So it is becoming an even playing field.
So,
So
how are you preparing your business for these trends expected?
see, once the it is an even playing field, even taking the risk becomes much easier. And our innovation center, I mean, we are a rare company where we are a small organization having our own innovation center, having almost 20 scientists, reasonably good quality 20 scientists who are working a 6,000 square feet innovation center dedicated for our own product development, but it is also available to the industry to come and do their research. They can come and give their product ideas, their quality challenges to us, and we help them to overcome them, obviously at a price. But then this activity will definitely keep us ahead of our competition in the MSME field. I'm not talking about the large organizations.
Right,
I'm
exactly.
not talking about medium scale organization, but in small scale organization, we will definitely benefit. And we have anyway ensured that we are flowing with the time. I won't say ahead of the time, because I mean, we are not that research oriented country yet. But I'm seeing the change. The prime minister keep talking about innovation. He keeps talking about being on our own, and we overall keep talking about we shouldn't be followers. We should be creating the technologies and the products. So the journey has become begun, but it's a long journey. It will take time, but at least we have begun.
So, in your sector, if we, ask Mr. Raje, uh, preparing themselves for the businesses, SME businesses in specialty chemical industry, preparing themselves with more R&D work, new answers to the problems of your clients, or the increasing the production capacity, which way you think is the anticipation in the next 1 or 2 years?
See, once you are in a specialty chemical line, it is not necessary that you will have volumes, but you are, if you are a problem solver, you rightly said that if you are a problem solver to your client, then that advantage will always remain with you, because anytime there is a problem, they will, the first person or the first organization they will call will be you. Okay, okay, this is what we are facing. It could be either a new technology, I mean, in the sense new products. It could be cost reduction. It could be a new formulation, whatever it is. But then being a part of their journey is what really always helps you. In our case, like we are suppliers to Eureka Forbes for last 30 years. And last 30 years, every time they needed anything new, they have always come to us. That this is what we want, can you do it? If we couldn't do it, obviously they have gone to others, but at least the first shout came to us.
Right. So basically, you're trying to say that yes, R&D is the more important part for next couple of years also for the specialty chemical.
Always.
So an MSME, even if SME is small, they have to look forward how, if not in house, how they can ensure their capability in respect of solving the client problems. That will be much more important than just being increasing the production capacity.
Yeah, absolutely. Because see, unless you show some innovation or at least the mindset of innovation, doing something new or something differently, even doing something differently is innovation, because that will save time, that will save cost, that will improve the performance, whatever it is. So one has to develop a mindset of innovation. I mean, just being a job worker is not going to keep you afloat and growing for a long time.
Mm-hmm.
But if you are different than the others, your mind is always ready to take the challenges. It will always differentiate you from the others.
Great. So thank you so much, Mr. Raje, for sharing your experience and your vision for MSME sector, what they should be doing it, and how specialty chemical industry is going through it currently, and last couple of years, what is happening in last 1 or 2 years. We'll see you again in some other conversation, and all the best to NICEM Chemicals. Uh, Wonderful working, bringing, keeping 20 scientist team in a SME business is really very commendable, and bringing solution to the global clients. SME दिखते नहीं है, लेकिन behind the scene बहुत कुछ होता है, and your companies prove something like that. Thank you so much uh, for coming on MSME Talk podcast.
Thank you, Trupti, for giving me an opportunity to share my passion, share my views. And I always tell all the MSMEs, look, come out of a mindset of being a follower. Be disciplined, be innovative, and always keep looking out for doing something better and better. I mean, the challenges are always there. I mean, once you are in a business, you have accepted the challenges, or at least you are ready for the challenges, is what I believe. But be something different, be something unique, and that will take you along.
Thank you. A very warm welcome to MSME Day special episode of MSME Talk. Today we have Pallavi Shrivastava, a co-founder of Progcap. She is going to share insights on India's retail and distribution MSMEs. Progcap is an MSME fintech. A very warm welcome, Pallavi, on MSME Talk.
Thank you, Tripti, for having me over and warm wishes for the MSME Day.
Thank you. So, Pallavi, let's begin with getting little about no more knowledge and information from you about the retail and distribution MSME ecosystem. So, which sector have seen the strongest growth in working capital demand over the last, say, 12 to 18 months, and which sectors have taken a little, backseat or facing some kind of headwinds?
Sure. I think, so India, as we know, is a very regional and a very seasonal economy and market, right? So, and most of our industries we operate in and broader ecosystem in general uh, follow very cyclical nature of business, right? So, FMCG, within that, maybe beverages where we operate in, consumer durables, electronics, wherein you have large appliances, small appliances, then you will have mobile, agri inputs, two wheelers and spare parts, steel, cement, paint. So many of these industries are very sort of seasonal in nature. And I think in terms of the demand uptake, I would say, if I just look at the last 12 to 18 months, it's been a very eventful time because, right after COVID, there was a pent up demand and then we saw good years of growth. But the last 12 to 18 months, when we saw around Diwali, there was GST2 impact, and we saw huge uptake of two wheelers and white goods. So there were some tailwinds around that time, which we could really see in terms of the demand coming up, in terms of the repayment patterns also, and I think after that, the last few months have been very tricky, very uncertain. Even though on a CAGR basis, consumer durables has grown by 11% approximately. Similar trend around 8 to 10% for two wheelers and spare parts. But what we are seeing is, after the West Asia crisis, given the raw material prices going up, now the impact is showing up. So in this quarter specifically, we are seeing the demand is a little bit muted. Uh, one of the things that we also learned from our white goods industry was, because of the focus on AI and data centers, there is a little bit of a demand for chips, and that is kind of making the prices go up higher because there's a demand supply gap when it comes to the semiconductor chips, which is going mostly towards servicing the data center demand. So that kind of optimization is also leading to price increase and therefore demand decrease, especially in white goods, right? Two wheeler, I would say, is been more stable, and kind of more sticky in terms of the customer base and the loan products that they are taking. FMCG has been very interesting because 85% of our portfolio in FMCG is beverages. So last year, the entire plants got washed out because of rains, and the monsoon came much sooner than the summer. So FMCG had its own challenges. This year, we are seeing the intense heat is again leading to pickup of beverages. So better off there. And then finally, agri. So agri is going through El Nino effect, so all of that. So we are now seeing the demand for agri input slightly on the muted side. And if I now stack up like these 5, 6 core sectors that we operate in, which are 80% of our business, consumer durables and electronics is what I would say that we are seeing better uptake in demand overall in the last 12 to 18 months basis. But again, last 2 months we are seeing some bit of challenge because of the price going up and demand coming up. So maybe we'll know, how the Diwali kind of pans out. That's when we do the maximum business. And then FMCG is a smaller portfolio. Again, beverages like slowly picking up, not going overboard. Two-wheeler has been stable. Agri has been stable mostly, but given the recent changes we are seeing, but I think we'll cross over that hump and we should see the demand coming back again.
So, Pallavi, while you were sharing about the some of the sectors where the real demand is coming, other sectors there is some sort of supply issues kind of scenario, and the demand is getting. So there could also be scenario where you might be seeing elevated working capital demand, and it might signal underlying stress rather than the growth. And
Right.
how you would in your platform would be interpreting these trends, and what factors you would be taking in mind to test that no, this is not a growth driven demands, but this is more of a stress driven demand coming from the sectors.
So you're absolutely right. Demand growth of working capital doesn't always mean that there is a growth, right? I mean, it can be an underlying stress. But I think the way we look at demand, it's not only in isolation in terms of somebody coming and asking for a short-term working capital loan. We also look at the repayment behavior, right? You also look at the inventory turnover, right? So you're sitting with a certain amount of stock, especially in the trading ecosystem. Has it been sold out? What kind of uptake has been there from a consumer perspective? So you get all of that kind of a broader data points, and that data points may sometimes come from the MSME directly, the retailer directly, or it can also come from the ecosystem. So we are, like we get a data from their distributors, how frequently they're buying from them, is there whether there has been informal credit in the ecosystem, wherein even though we may not be giving a credit to someone, there may be informal credit coming from the trade, right? There's a trade term that you pay me after 45, 60, 90 days. How better are the MSMEs repaying on those informal credit? That, or, are they taking the inventory repeatedly? Is there kind of a rotation in the stock? And then the repayment pattern. So of course, it's not just the demand, and you're not going to service the demand. You're also going to look at other parameters which give a sense of the fact that there's an underlying stress, or is it a really growth driven demand.
Okay. So Pallavi, have you been able to see across, the kind of retail and supply chain, retail and distributor network financing which is happening? Any regional trends in working capital demand in the MSME business activity, specific states or cities or business clusters which are emerging, is a very much visible as a growth centers, and any underlying factors you have been able to observe bringing
Yeah.
and boosting this momentum?
Yeah, I think a very big shift that we are seeing is that it's not a polarized growth towards metros, right? So it's moving towards tier two, tier three towns, and even below. And I think partly driven by, of course, digitization, GST, acceptance, and formalization, and a large part of it is to do with the infrastructure, right? So supply chains are able to go all the way till the last mile. That's where the modern trade is not available. So there is a large GT sales driven growth, which is what we fund. So definitely the growth is moving more towards beyond metros to tier two, tier three towns. And if I look at the specific hubs, and and also the other trend that we see is that the growth is also moving towards regional sort of centers and hubs. So, like you will have a factory set up in Ludhiana for certain kind of products, or maybe another setup could be Morbi, right? So these are very specific clusters where a certain kind of product is being manufactured, certain kind of business is happening, and then that's where also you see around that ecosystem the growth is more, and the demand is driven more from those clusters. So I think what we do in the last 7 8 years, how we are seeing it, we are broadly in north and south. Within that, UP, MP, Rajasthan, Maharashtra, these are the four big markets that kind of we service, and also Karnataka to some extent, that's coming up as a big hub. We know Andhra Pradesh story, right? That's also a very good story for a formal credit, 85% formal credit. We are actually taken up a study to do a barometer of sorts, across states of India, and see how the MSME ecosystem is in terms of doing business, in terms of access to credit, in terms of formalization, digitization, skilling, job opportunities, and basis that we're trying to arrive at some kind of a score, wherein we are able to say, which states are performing better, which are the ones that need work, and what kind of challenges and work is needed for those states to move up. So that will be something that we'll be publishing very soon. But it's been a great learning experience for us to see, for example, Rajasthan, which is one of our high demand and core geographies, where we find that only a fifth of the customers are formalized. Just 20% MSMEs are formalized, but 85% of them are doing digital transactions. So, the beautiful trend that we are also observing is that while if you're a formalized business and you're a digital business, our hypothesis at which we work is that you will get access to credit. If not from Progcap, then maybe from traditional banks, right? So our endeavor is that we include these customers into the formal economy by way of starting with formalizing and digitizing their work, right? Their supply chains. So wherever you see formalization of in of the customers is more, our hypothesis has been that that's when credit would also be in abundance, and those customers will be better have better access to credit. But the data and the study is showing us that formalization is not directly correlating to credit demand uptake. So I think we are looking at it from a lens of where which geos we are seeing better quality customers. They should have GST data. They are filing GSTs in time, returns in time. There is formal data available from other ecosystem partners. They are already a part of the formal credit economy, and then basically we look at how we can layer up the credit to actually help them grow. The other part of the segment is where they're absolutely new to credit, but there is some bit of work happening in terms of them having, even just having a Udyam registration, for example, right? They're having a GST record, they're filing their GST returns on time. So we look at customers from different segments, and we have different kind of credit policies to enable them, right? So when I look at regional demand, I look at it from aspect of both formalization and digitization, and then see how credit is actually enabling growth for them, and wherein you will find that not all geographies are showing very similar trends. And if I can just name, in terms of UP, because of the infrastructure push now, it's coming up as a big hub for us, is the largest market. Karnataka is coming up slowly, and of course Rajasthan, and
So,
Maharashtra.
any specific clusters in these states which your experiences coming, they have become more, active,
So like, we what we do is we do retailer credit, right? So and we go directly from a corporate to distributor to retailer, and that's where the hubs are basically where distribution is, and distribution has to address to the broader market. When you look at manufacturing setups, that's when the clusters make more sense, right? Like in terms of how, so our evaluation is not really around the cluster.
Clusters,
It's
okay.
more distributed.
More distribution based, right?
It's more
So when,
distribution based, yeah.
right, so when you're doing more distribution based, from flowing from the corporate to distribution and then going to the retailers, how is the decision making happening at the retailer level? They're getting influenced because of the distributors, or they're getting more influenced because of their ecosystem and local influencers?
No, so I think given the top-down approach, distributor of course becomes, or the brand of course becomes partly an influencer, but the demand has to come from the end borrower, right? The way to look at it is that there is a demand angle, where the customers want credit, they need credit, they are servicing that demand through maybe informal channels today. They are kind of finding ways to navigate all the challenges and then come out to keep a disciplined track record that helps them to access formal credit. The other side is the supply side of the story, right? And there is, while we see abundance of supply in terms of banks, the push from government, MSME credit being the buzzword everywhere, but actually that supply is not reaching the demand where the real demand is, right? We are still looking at the 14% of MSME credit gap today, right? So I think the influencing part definitely comes from the ecosystem, but the product per se, or the supply needs to cater to that specific kind of demand, especially in a cash flow based model where you don't have a predictable. We spoke about how the industries and the cyclicity of the industries impacts the business and the working capital cycles. These customers are directly handling that on a day-to-day basis. So definitely, if you give them a long-term EMI product to service a short-term need, or vice versa, it won't help. So I think there is a lot of work needed to be also looking at what kind of product is needed to address their demand, understanding the trade terms, understanding the cash flows, and basically then giving out products which help them to meet their day-to-day requirements. And it doesn't stop at just giving credit, right? You got to be able to go beyond it to help enable their business growth and do some capacity building, involvement of the ecosystem. And that's what is the real work to be needed, because of the fact that there is a very clear gap in demand and supply, the type of product that the borrowers need versus the kind of supply that we
Hmm.
have. So yeah, so I
Yeah.
think that's
Yeah.
our thesis and analysis.
Got it. So,
um,
Pallavi, from the data of your platforms and overall understanding in the retail and distribution segment, are there any common reasons where MSMEs get declined or receive lower limits than they requested, or struggle to access working capital despite having a regular active business?
Yeah, I think so it's again demand and supply driven. There is always a need for credit, and accordingly there is always an end use that has to be looked at. And I think the broad reason for declining is always going to be the fact that I don't understand you, or you're not running the business as per how I look at in terms of my credit model. Now, bank's credit model typically looks at, let's say, a balance sheet, your financials, your standing. Maybe fintechs or maybe new age NBFCs could look at a little bit more different alternate data approach in terms of underwriting. And maybe a customer that's getting rejected from the bank may be accepted by an NBFC, right? But the broader reason for decline declining credit could always be that your data is not formalized, or certain parameters are not met. uh, and most of these MSMEs, if we understand, will not have the kind of track record, documentation, formal track record of data that maybe a traditional lender or even many of the NBFCs would want, right? So how do we evaluate them basis data which is beyond their own capacity to be able to curate, right, or provide? And for that, one of the alternate ways that we look at is, we work with a broader ecosystem of brands, anchors, distributors. And whenever we have to, let's say, fund a dealer, we would look at directly brand data. So if we are able to look at alternate varieties of data and also get to an understanding of how this MSME or retailer operates, there is a better chance of being able to look at triangulation of that business data in terms of how they are actually performing on informal credit or are actually working with their suppliers, and triangulate that with how they're performing, let's say if there is on the bureau, right, on a banking. So if you already have a existing customer who has a civil track record, and you will look at the banking data, and then you will formulate your own scorecard to be able to improve that.
Okay, so these are all data which is not a fundamental financial data of the MSME, retailer, distributor, and these kind of transaction data, banking data, which you are collecting, and GST data and all. This is good enough and sufficient to make a decision to take them towards the
Absolutely.
growth path. So we are
Absolutely.
not as of so now we are completely from the data perspective. Uh, Platforms evaluating them are completely satisfied. Let me ask from that perspective.
Yeah, you can say that. And I think then also the important thing becomes monitoring, right? So, do you have mechanisms, in terms of in case a customer goes ori, right? How are you going to be able to get the money back, right? Because so you need to have your collection infra while your underwriting can be as
Yeah,
strong as it gets from your perspective, and whatever your learning models are. But I think the important thing is still going to be your credit infra, how you're actually training the customers. Are you involving a broader ecosystem, which is then allowing you to get better quality repayments, right? So I think the important thing is still going to be that you need to collect your money back, when you give. And so for that, maybe this itself is not enough, but then it comes down to your business model. For example, in our case, why do we go very segment specific? Because we understand that segment well, right? We have figured out the nature of the industry well. We've understood the persona of the customer well, right? So, and then you are creating credit models on top of it. So it's not simple GST. There's also sort of personal discussion involved. You'll have, in certain cases, a visit is required. In certain cases, you do need the balance sheet and financials if you're taking a large size exposure. We spoke about large ticket corporate loans that you were speaking about earlier. So naturally, you will not look at one size fit all underwriting, because all MSMEs are also not very similar. So
yeah.
you'll have different kind of policies depending on the
Okay.
type of customer.
So, Pallavi, when you compare the top performing MSMEs in retail and supply, distribution supply MSME segment, with the rest of the MSMEs in the platform, what common financial disciplines or maybe some best practices or growth behaviors consistently stands out?
So again, the three pillars: formalizing, digitizing, and then productive use of credit, right? Discipline in repayments. So we do a lot of these MSME education programs, and our focus is always going to be that you please make sure that you are actually keeping a very good track record of your business. You are making sure that how you slowly get to digitizing. Today, if you look at the last mile distribution, a lot of the work is actually happening non-digitally, right? In terms of order management, inventory keeping, all of that is based still on registers, right? So adoption of digital tools, and then when you take credit, being always making sure that you have a good repayment discipline, uh, are the entities that will keep on getting credit repeatedly over time and servicing their need. So very clear, there's no sort of rocket science in these businesses which are actually running on discipline and good credit behavior are the ones that are performing well, and then they keep on getting their credit uh, rate of interest keeps getting lower. They're able
Right.
to.
So along with that, yeah, you mentioned the digitization. So basically, the MSMEs in the segment who have got to the extent of digitized, the transaction is getting captured properly, their working is getting properly digitized, and the discipline of repayment track. So, showing the repayment track record and discipline, these two things are becoming the primary difference between the top performing MSMEs in your ecosystem vis-a-vis the rest of them.
Very fair, absolutely. And I think it has nothing to do with the size of the business mostly.
Absolutely.
Can be
No, no, no.
the
We are not even looking at the size. We were just looking, even if it's a small one, but it would be falling in your top performing in the sense never gets rejected, is growing, the demand of the working capital is continuously growing, and your approval is also happening without any question from your side.
Absolutely. And I think as a lending ecosystem, I think it's also one of the responsibilities that we take up, and we share with our banking partners that as we are doing this, we don't leave it only at credit, right? So enablement to be able to digitize, formalize,
Hmm.
enabling them to actually training that good repayment track record, incentivizing for good behavior. I think these are the nudges and tools that MSMEs do need, because if you're looking for a traditionally informally run business, suddenly taking formal credit, you won't find that you're going to make sure always the payment is made in time. So you have payment reminders, you have nudges built around that credit, so that good credit behavior inculcates. And I think that's a large part of also running a lending institution, which is not limited to just providing credit but also enabling good credit behavior from MSMEs.
Okay, great. Thank you, Pallavi, for sharing the insights from your working of Progcap with retail and distribution MSME segment. We'll see you around some other conversation.
Thank you so much, Tripti, for having me. Really enjoyed the conversation. Thank you.
Thank you. Hope you got some insights from this MSME Day 2026 episode series. Like always, send your feedback and topic suggestions on connect@msmetalk.com or on our WhatsApp number given in description.